Hey everyone, if you're renting right now, you've probably thought about buying at some point, and we're here to help you and guide you along that process because being a homeowner has so many more benefits than just where you live. So today we're going to break down a few stats and some options to really look at the big picture of what you could be compromising because you're renting versus owning. So let's get started.
Yeah, let's start with the wild stat. So the average US homeowner, their net worth is 40 times greater than the US renter. And that's because you're building equity, you're putting your money aside and not paying somebody else's mortgage.
And the asset that you are owning is appreciating over time. I mean, we're seeing anywhere, just in a typical typical Dallas market, we're seeing anywhere from 3 to 7% appreciation year over year. So you're holding your money in a great spot and you're using the asset as well.
Mm-hmm. So for the average renter here in Dallas, I'd say, we have kind of all over the place. An average renter may be paying $3,000 a month. So how does that really translate to what you can afford? If you're used to paying $3,000 a month, maybe that's what you want to stay with. So kind of what do you think you can afford at that price?
So at $3,000 a month, you could afford a home that's anywhere from $450,000 to $515,000, and that's based on a 7% interest rate right now in the city of Dallas. Now, if you go into the suburbs, some of those tax rates will adjust a little bit, and so your buying power might adjust slightly, but that's a really good gauge to go by. And then we've even had clients that are coming here for work, or they just don't feel like they're going to stay in Dallas forever. But if you think that you're going to be here 3 or more years, that's a really, really good reason and timeline to go ahead and purchase. And we'll see rentals anywhere, $10,000 or even more. Mm-hmm. But at $10,000, your company might pay your rent. But with $10,000, you could easily buy a $1.5 to $2 million property. And again, with that appreciation, then you're gaining even more income just by relocating for a couple of years.
Right.
So, let's talk about so you might not be paying $3,000. You might not be paying $10,000. Maybe you're paying, under $2,000. Well, so some of these numbers might feel harder to come by. So a $400,000 home or a $500,000 home, that still sounds really expensive. But there's other ways that you can become a homeowner versus just qualifying on your own. So let's talk about what are some of those options.
And keep in mind, you don't have to have 25 or 20% down to put on a home. There are loans out there that are 3%, 5% down. You don't have to feel like you're struggling to save that 20% lump sum. You don't have to do that. Another way to save money is to just have a roommate. If you're renting, it's possible you may currently already have a roommate. But that is a great way to make a mortgage more attainable for you and home ownership more attainable.
Definitely. And sometimes, even if you qualify for that loan, you really don't want that monthly expense because it's uncomfortable. Mm-hmm. So I know when I bought my first house, I bought it in Lakewood, right near White Rock Lake and behind Lakewood Country Club. And it was $167,000. But yeah. And but I know that buying that one set me up to be able to buy the next few homes that I've owned. But I brought my roommate along with me, and so she paid rent. She got a deal on the rent, and then we maintained and just loved on our house together, which was really fun. And it was an easy way for me to step into homeownership.
And if you don't like somebody living in your space directly, a duplex is another good option. You can buy multifamily, even up to a fourplex, and live in one of the units, rent out the others. And that can even exceed what your mortgage is, and you're making money there as a landlord too.
Definitely. Another option that we've seen, and I've seen it personally for investment properties or vacation homes, is that you co-buy. But that doesn't mean you couldn't do it for a homesteaded home. You could go in with a friend or a family member, and you could buy it together, and you share those costs. You qualify for that loan together, and then you're able to afford more. And it just reminded me, I had two brothers, and they had bought a home and renovated this home. They all lived in the home together, and then everyone was getting married. So they were selling the home, but they were able to start their new lives, their new married lives with a nest egg because they bought this home together. They wouldn't have been able to afford at that young age.
Mhm.
So I think they bought it for 300 and we sold it for over 750,
That's awesome.
which is great.
Yeah. I think if you're fortunate enough too to have parents that are willing to help you with a down payment or willing to help you buy a house, the baby boomer generation, Gen X, they're holding on to trillions of dollars worth of real estate, and that's eventually going to be passed down anyway. So if there's a way that you can nudge those parents to go ahead and pass along a little help to help you attain home ownership now, I think a lot of parents would be willing to do that, to see their children become owners earlier.
Let's go back a little bit to like if you did lean on a family member or if you did lean on co-ownership. The one thing that we will tell you is you should definitely talk to an attorney and the way to set up a legal agreement with that. I know with some of my friends or family members who've owned vacation properties together, they had a legal agreement that everyone signed, and it limited who could rent the home. So no one under 25 could stay there alone. Like if someone wanted to buy or sell, like how that would happen, because you have to have an exit strategy as well.
Yeah.
So I would definitely consult an attorney for something like that to set it up, but it's a really good option to get into homeownership.
Yeah. I guess another option would be if you're not ready to live somewhere that you own, but you're ready to buy. You can buy an investment property. Maybe if you're living in Dallas, you can find something more affordable further out in the suburbs and just have that just to start some equity, start your nest egg, and just have it as a rental. And then eventually maybe you can turn that into something where you can buy or sell and be ready to buy something that's maybe more what you're looking for in town. But over the years, you will have gotten the equity and the increase of price that home is worth.
And also remember that the first home you buy, or first home you buy, it doesn't have to be your forever house. Like you're not going to live there forever. So it doesn't have to be the perfect location, the perfect size. And paint goes a long way as well. So it might not be absolutely beautiful, but you could make it your own, which I think is really great. So Emily has a really great first time home buyer story. Why don't you share that with us?
So yeah, when I moved to Dallas, I had just graduated from OU. I was paying $400 a month in rent in Norman, Oklahoma. And coming to Dallas was a huge sticker shock for me. Something not great was thousands of dollars, or something that, was awesome, I definitely couldn't afford. So it actually was easier and more affordable for me to buy a 1-bedroom condo. I knew it was going to be low maintenance. There was no yard, no roof to have to worry about. I had an on-site manager there that would come change the light bulbs for me when I couldn't reach them. And it actually ended up being a great investment for me because I kept it after I moved out. I showed additional income, turning that into a rental so I could afford something a little bit nicer. Once I moved into a house for my dog, needed that yard.
Absolutely.
And I've had it as a rental for just over 10 years. And it's been very easy to keep as a rental just because it's low maintenance. And
what do you think the appreciation is from when you purchased it? Like
it's about doubled.
Wow.
Yeah.
And that's really no.
Yeah.
Like it wasn't really hard work.
No, I did a little bit of updating last year, but besides replacing a hot water heater, I had to do nothing. So,
and just for your reference, a hot water heater might cost anywhere from $600 to $1,500. Is that what we're saying? If it's a tent water heater?
Yeah.
Maybe up to $2,000.
Yeah.
Yeah. That's great.
So yeah, I think as long as you budget for home repairs, like I know they say 2 to 3% of the home's value every year, you should kind of keep that as a nest egg just in case something major happens or you're not caught off guard and getting into a cycle of staying into credit card debt or,
Right, right. I always say you never want to buy the max amount of what you are qualified for because you do want to go on vacations and you do want to furnish the property.
right.
So, and I mean, you don't want homeownership to be this extremely stressful thing. You want it to be, something you're really proud of and exciting.
And not everybody wants to be a homeowner, and we recognize that. I think there's people that are just want to be renters, and that's fine. But I think what we're here to guide are the people that want to transition from renter to homeownership.
And even if you don't want to, just like we said earlier, if you don't want to be the homeowner for where you're going to live, if you wanted an investment property, that could be a way to build up your net worth.
Yep.
Okay, so let's talk about mortgage rates. That's been a hot topic in our market for a couple of years. I know when I purchased my current home, my interest rate was under 3%, and now we're at over 7%. But my very first home, my interest rate was 6%. I will say if I would not have bought that home at $167,000 at 6% and waited potentially for those rates to go down, that home, I mean, in 3 years, I sold it for $250,000, and in 3 more years, it sold for over $600,000.
And if you had it today, you could have sold it.
We don't even want to talk about it. We don't even want to talk about it.
But basically, owning and holding it's going to appreciate unless something drastic happens. I mean, we don't really have to worry about hurricanes or anything like that here in Dallas, but any property you hang on to long term, if you look at the graph, it's going up.
Right. I mean, Dallas, that's one thing that's so great about Dallas. It is a major metroplex. It is still so affordable compared to other major cities. So if you're looking at Chicago, Dallas, Denver, we are in line with those. Actually, more affordable than a lot of those cities as well. So it's just such a great place to live. And people keep moving here. Just keep moving.
Yeah.
You've got great tax benefits with no state income tax. And then we do have what someone calls affordable housing.
Yes. I mean, compared to most of the other big cities in America, we're definitely considered one of the most affordable areas to be in. And DFW is such a large area. There's pockets, if no matter what your price point, you can find something that you really love.
Definitely. All right. So what do you think? Are you still a lifer to be a renter? Or are you ready to jump in to homeownership? Let us know. And if you could like, share, or comment below, we would love to talk with you.